Hi everyone, let's go over my bullish and bearish low time frame and micro Elliott Wave scenarios on Bitcoin. Starting with the low time frame bullish scenario, where we are looking for a wave 1, then a wave 2, and eventually a bigger wave 3 to the upside, which usually is the longest, biggest, and strongest wave in an impulsive structure, where you really want to see volume pick up while price is moving to the upside. And that is the main problem with this scenario at the moment, is that the volume over here is very low. One can argue that it is actually quite comparable with the corrective structure over here of this potential wave 2, so that is not really what you want to see in a wave 3. Another thing to take into account is that this wave 1 looks more like a 3-wave structure than a nice 5-wave structure to the upside, and this wave 2 retraced to the 886, which is a rare target for a wave 2 but a common target for a wave B and a wave X, after which you then expect either a wave Y or a wave C to the upside. Now for a bullish scenario, the 1.618 over here is a minimum target for a wave 3, sitting at 28.9k. If we then go to the bearish scenario, I'm looking at a 3-wave structure in either a WXY or an ABC, and the main difference is this final leg to the upside, where in a wave Y you're looking for a 3-wave structure, and in a wave C you're looking at an impulsive structure. And I brought back the ABC on my chart mainly because I found a new impulsive count in this move towards the upside, and there's also some small bullish divergences forming over here, which I'm gonna highlight in the micro counts and the CVD, which I will show you at the end of this video. So if we look at this scenario, then for a WXY we're looking at a 3 and then another 3-wave move, where the most common target area for wave Y is between the 1 and the 1.236, taken from the low to the high of W to the low of this wave X. We did wick above for a bit of a liquidity grab with the highs over here, and then retrace to the downside, which is absolutely fine. But after the high of this wave Y, you definitely want to see continuation to the downside. A rare target for a wave Y, however, is the 1.618, sitting in the target box right above price at the moment between 28.9k and 29.2k. However, with the micro bearish scenario that I'm going to show you of this move to the upside, it is not favorable at all to see price in a wave Y moving to the upside. So honestly, in this wave Y, you want to see a continuation to the downside. Now in previous videos I had a potential short setup over here, and you always have to ask yourself, what is your proof of resistance? What gives you confidence to enter a potential short trade, right? Is it a change of market structure, bearish divergences, whatever it is? However, because of these small bullish divergences over here, which I'll show you in a second, I now removed that potential setup as well, and I first want to see how price is going to interact with this blue target box that we have right above price at the moment between 28k and 28.2k. Now for an ABC, the target area over here above is still a valid target for a potential wave C. So if price would continue to the upside and hit this target area, I'm very interested to see what price is going to do in this area and what potential proof of resistance we're going to see for then a potential short scenario here and a continuation to the downside in also the medium and high time frame bearish scenarios. If we go to the micro scenario and then check the bullish scenario that I have for you over here, then this is the new bullish scenario basically, where I'm looking for a 1, 2, 1, 2, and then eventually a bigger 3, 4, most likely already finished, and now looking for a wave to the upside, and then a wide 5 finishing the green 3. And it would be quite nice if the green 3 can potentially hit the target area, then have a bit of a range right around this target area for this wave 4, before then a spike to the upside in a wave 5, basically taking the highs of the range of wave 4 before then eventually continuation to the downside. In this scenario, this green wave 2 retraced to the 0.382 on the non-logarithmic chart, which is a minimum target for wave 2. It is a rare target, but it is a target nonetheless. Then we have the second wave 1, followed by the second wave 2 over here in white that retraced to the golden pocket, which is a very common target area for a wave 2. And as you can see, the trend lines in this scenario are actually converging. If I would extend them, they will eventually meet at the same point. So that is what you want to see in a 1, 2, 1, 2. It is only the case if, however, you use the candle bodies and not the candle wicks in this scenario, so that's something to keep in mind. And then if we look at this wave 3, we're looking at a 1, 2, 3, 4, and then an extended fifth to eventually reach the 3 trend-based fib extension, taken from the low to the high of 1 to the low of wave 2, which is fine as an extension for a wave 3. Now this wave 4 bounced above the 0.5. The 0.5 is a maximum target for this potential wave 4, Fibonacci taken from the low of 2 to the high of 3. If price would move move below the 0.5 but then close above, so basically a wick and then close above, in my opinion that is still fine. However, closing candles below the 0.5 would invalidate a wave 4 and most likely this whole scenario as well. So you want to see price continuing to the upside, where again we have this target area for a potential interesting resistance area, but because we have been spotting some bullish divergences over here on the low time frames, I'm not too confident yet in a potential short scenario, and I just want to wait and see what price is gonna do. That is also then the reason why I removed that potential trading setup, because if we quickly show you the bullish CVD on the very low time frame, then this is what happened. And I've been actually talking about this in the Discord group, so I've been updating there as well, where price started to create higher lows. But as you can see on the CVD, price created lower lows. So a higher low here on price, lower low on the blue CVD. And then over here we had a higher low on price, but a lower low on the yellow CVD. So we had a double bullish divergence going on over here, which was for me the main reason that I don't really like a potential short setup. Because hey, if we think about proof of resistance, you don't want to see these type of things going against your potential position, right? Like, yeah, change of market structure, maybe price moving to the upside, creating bearish divergences over here. But seeing bullish divergences goes against my initial idea, and I don't really like that, because even though price now, as you can see on the 15, might show bearish divergences, where as you can see we now have a lower high on price and a higher high on the yellow CVD, I don't like the fact that we created bullish CVD divergences over here. So I'm going to be very patient, sit on the sidelines, and if price is going to find resistance over here and then maybe retrace, for then a retracement again to the up and maybe some new bearish divergences over here, yeah, then I might be interested in seeing some proof of resistance, for example, you know, depending on my personal strategy that I have developed. And then you have to decide for yourself what you are, of course, going to do around this area and with the plans that you have and the strategy you have, because of course there's no financial advice. But if price is continuing to push to the upside, then eventually I will be looking for that wave 3, then a wave 4 and a wave 5, after which then I would prefer to see a continuation to the downside. And if we then look at the bearish scenario, then in this scenario, we were looking for a 3-wave structure in a WXY, where this final move in a wave Y is then a zigzag, a 535 structure, where the 1.618 is a rare target for a zigzag taken from the low of X to then the high of A to the low of wave B. And you don't often see wave C of a zigzag, this final 5-wave structure, then going to the 1.618. So that's something to keep in mind as well. And the 1.618 is a rare target for a wave Y taken from the low to the high of W to the low of wave X. So two rare targets over here, which is, again, it's rare, but those are targets nonetheless. And then after the highs made at this wave Y, you want to see a continuation to the downside. But of course, with these bullish divergences, one first wants to wait and see what is going to happen around this area. And if price is going to push towards the upside, the next area of interest for me is going to be the target box right above price at the moment, between 28.9k and 29.2k. I hope this video was helpful or valuable to you. Please check out the most recent educational update I've done about the best trading indicator you can use, in my opinion, which is the CVD. Thanks for watching and subscribing, and I will see you at the next one. Bye bye.